We're glad to have you back. Inflation rate is one of the critical macroeconomic indices used to ascertain the health and well-being of an economy, and is considered to be harmful to an economy when the rates are deemed to be significantly high. In Nigeria, inflation figures has recorded an upward trend of 18 consecutive months before showing a decline in the month of April and May. However, the double-digit inflationary trend has been attributed to COVID-19 pandemic, expanding foreign debt, currency scarcity, and extreme insecurity issues, which has resulted in increase in prices of consumer goods. Despite country's inflation rate falling in 2 months in a row to 17.93% in May 2021, down from 18.12% in April 2021, this drop has not been significant enough to alleviate inflationary pressures impacting the average Nigerian, as the increase in price of consumer goods continue to persist, reducing the quality of life and standard of living as disposable income of Nigerians continue to deplete. With the current realities on ground and the driver of inflation unabated, analysts are projecting that headline inflation for June will likely creep back to 18.1%, a level last seen in March 2021, and this could represent a point of inflection on the trend line of declining inflation which started in April. To discuss this more, I have joining me via Skype the fiscal policy partner and the Africa tax leader at PricewaterhouseCoopers, Mr. Taiwo Oyedele. Mr. Oyedele, good afternoon and thank you for your time on the show.
Good afternoon.
Yes, let's go quickly to our discussion. Looking at what are you expecting? We've seen a lot of projections from agencies, both local and international. But in your view, with what we've seen the last 2 months, what do you think would happen as we expect this figure to be out tomorrow by the NBS?
Yeah, you're referring to the inflation figure. So we have seen some level of moderation in the past 2 months or thereabouts. This has been marginal. So if you think about the people responsible for our inflation, we certainly have to attribute a big percentage of that to food inflation. We've seen some level of harvest in the past couple of months because of the rain. But also, unfortunately, the level of insecurity has continued. Today, I heard in the news that about 45 farms were attacked in Plateau State, I believe. So all of this, in a way, means that we can't, it's not Google yet in terms of food inflation. So I'll say overall, maybe a slight increase in inflation rate, but nothing significant.
Now, let's also look at the commodity price movements that we've seen in recent times. That is the argument of Nigerians. They are saying that we saw a reduction in food inflation, but they are saying that in actual sense, we're still paying more for all that we buy around.
Yeah, that is true. I think this is one point that Nigerians need to understand. When we say inflation is moderating or there's a decline, it does not mean that the price of goods and services are coming down. So even when you had inflation at over 18% and it came down to slightly below 18%, it did not mean that the prices of goods and services were less. It meant that it was increasing, but increasing at a slower rate. So in other words, even when inflation is moderating, prices are still going up. So Nigerians are indeed right in terms of what they experience, in terms of reality when they go to the market, prices are still going up.
Now let's also look at high logistics costs, which is something that's happening now. Cost of logistics is on the high side and exchange rate pressure. What do you see? What effect do you see this having on inflation figures?
Yeah, so first with the logistics, because you need a lot of infrastructure to have affordable and efficient logistics, in terms of whether you are delivering goods, whether you are coordinating stuff, well, unfortunately we don't have that level of good infrastructure in Nigeria. So if you think about even a country like Rwanda, where the postal service was able to, because think about the postal service and the physical infrastructure they have across Nigeria. So in Rwanda, they're already delivering using drones. But we are not even, already taking advantage of things like that. Roads are bad, flying is complicated, whether you think about the ports. So logistics is going to continue to be a challenge for us in terms of driving inflation. And of course, in the FX space, we continue to struggle with FX liquidity. We see that the foreign reserve has been on the decline. What that means is it puts pressure on the exchange rate. And because we still likely import a lot of what we consume, including services, which we don't often mention, what that means is we're having imported inflation as a result of exchange rates, and that flow through means that inflation is not going away anytime soon. The small good news, though, is that the price of crude oil has been recovering, and it seems to have stabilized around $70 plus per barrel. If that is sustained, and we're able to also produce in terms of volume, because unfortunately we have the OPEC restriction, assuming we're able to produce maybe about 2 million barrels per day, and the price remains above $70, that will be good news for the external reserve. And any good news that you have for the external reserve is good news for the rate of exchange rate, and therefore for inflation that will flow through in that process.
Okay, almost finally, let's now look at investors and also market reactions to all of this, because definitely all of this would affect investors' confidence, and the market is also reacting to this. The market has been bleeding for some time now. What do you make of this, Mr. Oyedele?
Yeah, I think the market is generally used to deal with inflation because those are uncertainties that the markets can model and investors can deal with. It doesn't matter whether it's in the 20s or 10 plus or in single digits. So I think what is more important is what we do with those information once we get them, and how do we react to them. So if we continue to have inflation that is high, and food inflation is even higher, what that means is every person, every household have their own inflation rate. The inflation rate is therefore higher for the poor than it is for the middle class and the rich people, because the poor mostly consume a large percentage of their household income goes into food. So if they are spending more and the inflation is higher, when their purchasing power is being eroded, it increases inequality. And the more inequality you have, especially when people feel hopeless, the more the risk that something small can trigger a violence, like we have seen in South Africa recently. So these are the major issues. I think more than what the investors will do with the inflation numbers, what is even more important is the policy responses that we're going to introduce as a result of this to address the fundamental and underlying issues driving those inflations, and what the consequences will mean in terms of high unemployment plus inflation giving you a high mystery index. It's clearly a time bomb waiting to explode, but we can do something about it.
Let's wrap up this discussion. We expect the MPC to meet on the 26th and 27th of this month to decide on the monetary policy stance. Mr. Oyedele, any expectations? Do you think there will be any shift?
No, I don't expect that there will be any shift. I expect that they will maintain status quo, keep all rates, because really, if you think about interest rates, for example, we do not see any particular reason why you want to either adjust interest rates. The economic recovery in terms of GDP numbers are still very negligible, almost saying that we're flat. So you definitely don't want to then increase interest rates. You do reduce them. I don't think so as well, because at this point you're also trying to fight inflation at the same time. So reducing interest rates will not help that. But I think overall, some people have spoken about CRR and the other benchmark from a monetary policy point of view. But I think overall, this is the time to try and consolidate and see how the policy measures we've had in the past will flow through the economy rather than beginning to adjust at this time. So my expectation is that they will maintain rates.
All right, it's a good way to leave it there. I've been speaking to fiscal policy partner and Africa tax leader, PricewaterhouseCoopers, Mr. Taiwo Oyedele. Thank you very much for your time. We always appreciate you on the show.
Thank you for having me.